Everyone, welcome back. Today we're looking at Arrival. Arrival advances US EV tax credit plans and the Kensington Capital acquisition. And subsequently, we've already seen a positive impact on the share price. A really positive impact on the share price. It's absolutely incredible. Now, this is a look at the Arrival share price in the last 6 months. So let's take a look at the Arrival share price within the last 6 months. Now, with the recent acquisition, the share price of Arrival is instantly taken a U-turn. And this, of course, makes a lot of sense. There's actually after-hours trading right now, and it's trading just around $3.86. In fact, in the last month, it's gained over 77%. Now, this is all because of the strategic business combination. Now, this is no mere coincidence, especially for Arrival. If you take a look at the share price within the last 6 months, it's clearly showing that the share price was once at 30. However, 6 months ago, I don't remember the share price being that high. So that's not a proper reflective of the Arrival share price. That's not actually correct, technically. It is mostly due to the fact that the entire share is at a reshuffle. The shares outstanding have significantly been reduced to 15 million shares outstanding. So is this a good time to invest in Arrival? Maybe. And this is not financial advice. But with share price this low, the price of this share will skyrocket quite soon. In fact, it doesn't require a lot of money being put into the share. It requires a small amount of money being put into the share in order for the share price to instantly shoot up another 50 to 100%. And keep in mind, the market cap right now for Arrival sits at $57.9 million. I still think this company is extremely undervalued considering their IP. With all the intellectual property that they own, I think that this company is a bit more valuable than $57 million. The market is in a funny place right now. The bigger companies are actually doing well. Once again, Apple, Nvidia, Tesla, they're all doing great once again. However, smaller cap companies like Arrival, like Polestar, like NIO, they're not doing so well. And for a lot of people, that could actually be an opportunity. Now, like I said, this is not financial advice. This is just for educational purposes, but it's also just my opinion. The company has a very difficult future ahead. Of course they do. They desperately need new funding. But with share price being this cheap and with the market cap being this low, and keep in mind with the shares outstanding being only 15 million, a lot of things are going to happen with this share in the near future. I wouldn't be surprised if this share went up 200% in the next few months. I wouldn't be surprised. In the next 3 to 6 months, maybe 9 months, if this share went up 200%, I would not be surprised. That would put the market cap somewhere around 170, maybe 180 million. And I'd say realistically, this company is probably around 150 to 200 million in realistic valuation, if you consider their IP. In fact, it might actually be even more valuable. But the problem is, what company can take all of that IP and turn it into something profitable? There's not a lot of companies that can take Arrival IP and turn it into something profitable. Not right now. It's a difficult market. Building EV vehicles, it's extremely capital intensive, especially when the delivery units are low. It's even more impossible to break a profit. And in this business, you kind of want to break a profit immediately because Tesla is doing so well. Investors would rather invest in Tesla than to invest in Polestar, Arrival, NIO, the list goes on, due to the fact that Tesla has that huge head start. So this is British electric van company Arrival, and they're relying on the US Inflation Reduction Act and a second reverse merger to give it a second chance at survival, while developing vehicles for well-known clients such as United Parcel Services and Uber Technology and UPS, by the way. The company has blown through large sums of money without even reaching mass production. That's true. They've used up a lot of money and there's still no vehicles being regularly produced. There's just prototypes mostly. So Arrival will first concentrate on just one vehicle that's made in the United States using $283 million. It should get via a merger with special purpose acquisition company Kensington Capital Acquisition. This vehicle, a large class 4 delivery van or medium duty van, will offer clients $40,000 IRA subsidy, a significant increase above $7,500 for a smaller electric vehicle. New investors and arrivals are very excited about the US products and US market, according to the chief financial officer, that's John Wozniak. So there's a lot of tailwinds there, one of which is recent California law requiring commercial fleets to switch to electric over the following 10 years. Importantly, Arrival claimed that early backer UPS is still a key client. It has opened up 10,000 vans. It has an order up to 10,000 vans. And UPS is primarily based in the United States. You want to get a lot of investment, the United States is perfect for Arrival right now, I would think. Let's not forget that this company is based on building micro factories in cities around the world. It's not limited. It just needs more funding and to start delivering as much vehicles as possible. Right now, no delay, seriously. Now, the IRA, which became effective in August last year, has given Arrival enough of a lifeline to draw in new investors. Tax credit for customers who buy specific EVs are included. Wozniak stated that he's certain Arrival will meet its goal for starting to produce its medium-duty extra-large van at the microfactory in Charlotte, North Carolina, by the end of 2024. So we still have to wait almost 2 years, a year and a half approximately, before this vehicle starts being produced. Not before it starts being delivered, before it starts being produced. That's a long time to wait. The good thing is that Arrival actually doesn't have a lot of competitors, except for Rivian in the United States. But I think the Rivian vans that are being built, they're exclusively to Amazon as of this moment. I haven't seen any other Rivian vans for any other company. It's mostly just Amazon. Now, there are other EV companies that are building electric vehicles, such as delivery vehicles, certainly. But I think the place for Arrival to get more funding are places like the United States, the UAE. I think if they couldn't find that funding in the United Kingdom, then they have to try another market for certain. But ultimately, I think Arrival should just be sold off to another company that can actually manage it properly. Another company that can actually invest. A big company, someone like VW, Volkswagen. But it's not looking likely. It's really not looking likely, and it's surprising that there's such a good company out there. It's really cheap, but no one wants to buy it. Even this cheap, like 100 million. Super cheap, but no one wants to buy it. Now, on the other hand, Arrival has also reduced its workflow by roughly 75%. That's 750 people in order to save money. In a sector where the cost of introducing a single model may easily exceed 1 billion, Arrival had roughly 130 million in cash at the end of the first quarter. The business issued a warning in November that it would run out of money before 2023. The second SPAC for Arrival is with Kensington, a company whose past agreement helped businesses including Quantum Space, Amprius, and Wallbox in the market. Now, Wallbox, they're another electric vehicle charging company, and they're actually gaining a lot of popularity in the market as well. Since that it's too small for the majority of major manufacturers, the market for medium-duty electric vehicles might be worth $5 billion or more, with price tag expected to start roughly $175,000. According to CFO Wozniak, we believe that Class 4 is a sweet spot where Arrival can make a lot of money. We surveyed the marketplace for competitors and found that there was plenty of space to grow in that market. And they're right. There is plenty of space to grow in this market. It's just unfortunate that they don't have the money. They don't have the money, and they certainly don't have the infrastructure or the experience. So essentially, it's going to be very difficult going forward for Arrival. But this is some positive signs for investors, however. Now, that is it for this video. I still like Arrival. I still believe in Arrival. However, I don't think they can be successful without being acquired by another major manufacturer in vehicles. I think that's the only way for them to have any success at this moment. So that is it for this video. Thank you for watching. Subscribe to see more. Leave a like and leave a comment. Check out our website. Subscribe to our newsletter. There's a link in the description and you can subscribe on the homepage. Thank you for watching, and I'll see you in our next video.